Aloha, good morning. Welcome to the House Committee on Economic Development. It is Friday, February 4th, and it is 10:02 a.m. First bill on the agenda is HB 1919 relating to general excise tax exemptions. First up, we have dough tax with comments.
Good morning, Chair, Vice Chair, members of the committee. Tetsuya Ishii with the Department of Taxation, and we stand on our written testimony for any comments.
Thanks very much. Next, we have the Hawaii State Commission on the Status of Women in support. Next, we have the Hawaii Food Industry Association. Lauren, are you with us today?
Good morning, Chair. I'm Alexis Chapman for HFIA. Thank you for the opportunity to testify. I know you're all familiar with our testimony on this, so I won't go through the whole thing, but I did want to call your attention to one aspect, which is that Arkansas actually did this. In 2007, their sales tax, which applied to groceries, was 6%, which was one of the highest in the country. And they reduced it to 3% that year. They brought it down again a few years later to 2%, then 1.5%. And then in 2019, they reduced it to 0.125%. So this is possible. This is something that a state can accomplish. And I believe that if Arkansas can do it, Hawaii can do it. And I'm available for questions. Thank you.
Thanks very much. Next up, we have Ma'i Movement Hawaii in support.
Aloha, Chair Quinlan, Vice Chair Holt, and committee members. Mahalo for the opportunity to testify. I'm Nikki Ann Yee of Ma'i Movement Hawaii. My sisters and I stand by our testimony in support, and I would like to specifically speak to the exemption on period products. Some of you may be familiar with our work addressing menstrual inequity in schools, but our mission is to end period poverty in Hawaii. And that extends to all demographics and all areas that need to be addressed, especially when it comes to menstrual equity. It's an issue that is intertwined with other societal issues, race, gender, socioeconomic, that disproportionately affects girls, women, trans, and gender nonconforming individuals. I appreciate the intent of this measure because it tackles the structural intersectionality of the problem. And, you know, in our report, we said we co-authored with the Hawaii State Commission on the Status of Women, and we found of our survey recipients, 30% found it difficult to afford period products. Cost was the most cited reason. And data from the US Census in just the last 7 days, 84% of those earning less than 35K are finding it difficult to cover usual household expenses. Even at the higher bracket of 100 to 150K household income, half are finding it hard to cover household expenses. So, you know, I remember growing up in Waimanalo, it was difficult at times. I remember my mom trying to, you know, find coins for $5 gas just to take us to school and go to work in town. That was a long time ago, but local families are still facing these issues, and it's even worse today. So, you know, whether you are a high or low earner, you know, it's not just cents to the dollar. This really helps to support those that are financially insecure. Thank you for this opportunity to testify.
Thank you very much. Next up, we have the Hawaii Association of Professional Nurses. Bradley, are you with us today?
Hi there, committee. My name is Bradley Kuo. I'm the legislative chair for the Hawaii Association of Professional Nurses. We are in strong support of this measure. Hawaii is I believe the only state that continues to tax private practices for private healthcare practices. It has become more and more difficult to do business here in Hawaii for our medical practices. So getting rid of a medical tax would be very, very helpful. Thank you so much.
Next up, we have Tax Foundation of Hawaii.
Thank you, Chair, members. Tom Yamachika from Tax Foundation of Hawaii. This bill basically it tries to exempt three things: foods, medical services, and feminine hygiene products. As to food, it's always a challenge because you need to define what foods are exempt and what foods aren't. The exemption that's in the current bill has inclusions and exemptions upon exemptions and exemptions of exemptions of exemptions. And I couldn't follow it. It was too hard. Then that's the challenge that's been faced by most states trying to figure out what foods are taxable and which are not. For medical services, I do resonate with the Association of Nurses. The current way the tax is structured, hospitals do qualify for a GET exemption because they are tax exempt. They're 501c3s, and they provide services that qualify for them for the exemption. But this is not true of private medical providers. So there is an inequality there. And for feminine hygiene products, we do note that there is an exemption on the books already for RX drugs and prosthetic devices, and nothing over the counter is exempt. And if you're going to start exempting some over the counter stuff, then there's a question of whether you are creating inequality. I'd be happy to answer any questions.
Thanks, Tom. We missed you on Wednesday. Next up, we have Synergy Health LLC. Dr. Christian Kitamura, are you with us today?
Yes, I am. Good morning, Chair Quinlan and the rest of the committee members. Thank you for this opportunity to speak. A short background again, I'm Dr. Christian Kitamura, locally raised girl here, went away for school, but came back to Hawaii to do my internal medicine training. As a physician who has worked both for larger corporations and now currently in private practice, I am strongly in support of this tax exemption bill. I also work as a faculty member for our JABSOM, our medical school here in Hawaii, working closely with our medical students, encouraging them, the benefits of serving the people of Hawaii and staying here to continue to, become physicians for our community. And it's very difficult to explain that to them, knowing what we have to suffer here in Hawaii in terms of actual physicians with our cost of living compared to compensation on the mainland. And one of these factors as a private practice practitioner is the GE tax. Just some quick backgrounds. Again, large corporations like Queens, Hawaii Pacific Health, they are exempt from this exception. And private practices have not. However, we provide, again, a lot of medical services to our patients of our community. We are short over 1,000 physicians in the state of Hawaii, and we have the fewest young doctors in the country due to some of these punitive tax laws for physicians in Hawaii. For our providers, we serve Medicare patients, Medicaid patients, TRICARE patients. Oftentimes we pay for the Medicare patients' GE tax, and a lot of times we absorb the GE tax for our Medicaid patients, which are our Quest insurance patients. For these patients, sometimes the reimbursement rates, which are out of our control due to the insurance companies, they will have little to no profit margin, and therefore the GET tax can result in expense of the service exceeding our reimbursements. We are the only American state taxing Medicare, Medicaid, and TRICARE healthcare benefits. And in fact, we are one of the fewest doctor availability to accept Medicare patients behind other states and the District of Columbia, according to Wallet Hub. And again, we have an aging population, so we have a large Medicare constituent. Hawaii's entire population on Medicare, Medicaid, and TRICARE programs, again, to reinforces about 60% of our population. We talk about the physician shortage. Neighbor islands have even more of a severe shortage. And as personally a young physician, I returned back here in 2013. We are laden with hundreds of thousands of student debt, trying to grow our entrepreneurship, do private practice so that we can have the autonomy to make decisions for our practice runs, not have to have admin kind of dictate if we work in a hospital system. So it's something that I speak with my medical students daily, and this would be a really big step forward with this exemption. So thank you so much, and I'm available for questions.
Thanks very much. Next up, we have Cindy Powell, MD from David Fitzpatrick, MD. Cindy, are you with us? I think you're muted, Cindy.
Good morning, Chairman and committee members. Thank you so much for this opportunity to speak. I am a physician and I am in endocrinology private practice in Oahu. And I'm speaking today representing the voices of young physician leaders who are going to be the healthcare providers for our aging population of Hawaii. And per capita, we have one of the rapidly advancing aging populations in all of America. And we will not have enough doctors to take care of our aging population in Hawaii if we are not proactive and do something about it now. The reason why this bill is relevant is because, one, we need to address the inequities. Why is it that the corporations, the hospitals here are not having to pay this GE tax while private practices are? 42% of practicing physicians, that's nearly half of practicing physicians, pay this GET tax because we're in private practice. But if it is so financially and economically unreasonable for us to stay in practice, there will be no doctors paying the GET if everyone either moves to the mainland or joins corporation. There will be no GET anyway. There's no GET that will be coming to the state because there won't be private practice left. So this particular bill addresses the fact that the patients who have commercial insurance, we pass on that tax to commercial paying insurances. Now, for a regular visit, it may not matter as much, but for a patient who is doing a procedure or a surgery that is higher cost, that tax can be very financially impactful. And we are the only state in all of America that taxes healthcare in this manner, that on the gross dollar of expense, the gross dollars that's charged, this GET is passed on to the patient. This is unethical, that medically necessary procedures, visits, and care is required to pay, that the patients are being assessed this tax. It's unethical. And, in especially this economy, that can be very, very meaningful. And I can tell you for a fact that as a physician, I have seen patients decline to do medically necessary procedures because of the cost, and the GET, that percentage, it matters too. So it's unethical to tax patients, and we should not be the only state in all of America to tax patients this way. On the physician side, this is crippling our ability to have a work care force that is going to be able to take care of Medicare patients. For patients who have Medicare, Medicaid, and TRICARE, the physician cannot pass through that tax. So our private practices absorb that tax, even though Medicare, Medicaid, and TRICARE reimbursement rate is already lower than commercial insurances. So when we see patients with these insurances, we already are taking the financial burden of getting lower reimbursements. And then you add GET on top of that, that's even a bigger financial loss compared to when we see a private insurance patients. Now, we are already one of the lowest Medicare reimbursed states in all of America. You add the GET on the gross collections on top of that, we are by far absolutely the lowest reimbursed Medicare state in all of America, lower than Northern Alabama, where the cost of living is exceedingly less. Now, that's a big problem because 42% of physicians practice.
Sorry, Cindy, could you just summarize for us? Sorry.
Okay, but the point is, we are going to not have enough. We have the lowest rate of Medicare acceptance in all of America, the lowest, dead last. We have the lowest rate of young physicians working in America, dead last in all of America. And there's a reason for this. And losing physicians is going to cause an economic problem. And bringing physicians here by lowering the taxes and actually making it more welcoming and favorable for physicians to practice here will boost economic development and will generate aggregate economic output. So I hope that you will vote in favor of this bill.
Thank you very much. That concludes our testifiers for HB 1919. Members' questions. Chair Onishi.
For DOTAX, please. No tax. Have you guys cost out this bill?
Yes, we have. So I can let me just summarize this so I don't have to read all the numbers. The first year is a half year thing as the measure is written now. So the exemption for food is 106 million. The medical services is 75 million. And the exemption for feminine hygiene products is 0.7 million in the first year. In the second year, it goes to 268, 188, 1.7. And 280, 197, 1.7. And it goes up like a little bit. So it goes 290, 301, 313, 205, 213, 221, and then 1.8 each year after for the feminine hygiene products. So about 300 million for the food, approximately 200 million for the medical services, and a little under 2 million for the feminine hygiene products for the out years, yeah.
Okay, can you provide that to the committee? I was surprised that I didn't see it in your testimony.
We usually don't provide it until the finance committee, but yeah, we did produce it, yeah, so we will turn it in.
I'm sorry?
We'll provide it.
Okay, thank you. I don't know who to ask, but I wanted clarification in regards to exemption for medical services. Does that include like doctor's offices or doctors, independent doctors, or nurse practitioners?
There are some problems with the way the bill is written, so it's difficult to tell at this time.
Okay, because it seems like it's only hospitals, clinics, and facilities.
It would appear so.
So
I can answer that generally if you want, Chair.
Oh, okay, thank you.
Yeah, so what they're talking about is a medical exemption for nonprofits. And so the nonprofit, the 501c3 would include hospitals and infirmaries and certain types of medical providers. So it's not necessarily by the service, but by taxpayer classification. And this bill attempts to, I guess, exempt the medical services, the actual services. But the exemption that is was being discussed in terms of the hospitals is not special to medical services alone. So it's all the nonprofits.
Okay, but so would this portion apply to doctors?
This exemption?
Yeah.
I believe that's the intent.
Well, I mean, it may be the intent, but does it actually?
I mean, from our perspective, yes, but I guess we can ask the proponents then, and I'll just sign off here.
Oh, okay. If you guys are applying it to doctors and doctors' offices, then I'm fine. Thank you.
Members, any further questions? Seeing none, we'll move to the next bill on our agenda, HB 1962, relating to gambling. And I would just like to ask that professional testifiers, when possible, please do stand on your testimony. First up, we have DHHL. Chair Isla, are you with us today?
Good morning, Chair Quinlan, Vice Chair Holt, members of the committee. Tyler Kipagums, Deputy to the Chairman for the Department of Hawaiian Homelands. We will be standing on our testimony.
Thank you very much. Members, questions? Vice Chair.
Do we have BNF? No. All right. Well, I guess I'll just ask. It's not really a question, but in BNF's testimony, they always make reference to the ESSER funds and the maintenance of effort for DOE. And I don't know if $500,000 is going to affect that, but just wanted to say that. And thanks, Chair.
Thanks very much. Members, any further questions? Seeing none, we'll move on to HB 2004, relating to online fantasy sports. First up, we have the Attorney General's office. Christopher or Brian, are you with us today?
Yes. Good morning, Deputy Attorney General Brian Yee, on behalf of the department. Just to summarize, this bill proposes to create a new agency within the Department of the Attorney General, and we believe that's the wrong department. Our office does not provide regulatory services. We provide advice, counsel, and legal services to the subject matter departments that provide the regulatory services. In addition, there's a potential conflict that would be created if we were to pursue an action against an unlicensed operator, where we would be both the witness, a potential witness in the case as well as the prosecutor. Accordingly, we do ask that the committee place this regulatory body within some other department. Thank you.
Thanks very much. Next, we have HPD in opposition.
Good morning, committee members. I hope everybody's doing well. HPD opposes this bill, and we stand on our testimony. But I'm open to any questions. Thank you.
Thank you very much, Captain. Next up, we have DraftKings in support.
Good morning. My name is Rebecca London. I'm a government affairs manager for DraftKings. We've submitted our written testimony, and I stand by my testimony and ready for any questions that you may have for me.
Thank you so much. Next up, we have the Fantasy Sports and Gaming Association. Peter, are you with us today?
Hello, my name is Peter Shanky. I'm with the Fantasy Sports and Gaming Association. Run the government affairs for them. I also am the co-founder of a company called RotoWire. You can see my background, and I'm the president of that company. It's a leading fantasy sports information provider. The Fantasy Sports and Gaming Association represents DraftKings, FanDuel, and a number of other paid fantasy contest operators like the Fantasy Football Player Championship, the National Fantasy Championship of Fantasy Baseball.
I'm sorry, Peter, we can't have logos in the background. Is there any way for you to take that out?
Yes.
Yeah,
I did not see that.
YouTube has been striking our videos. Someone had a Pepsi the other day and we got in trouble.
I apologize. I did not realize that in the I looked at all of the documentation and unfortunately didn't see that. So I apologize. Let me rectify that a little bit. I will have a
you know what? We'll come back to you in a minute.
There we go. I'm good.
Oh, you got it? Okay, perfect. Go ahead, Peter.
Got it. There we go. A more geographically plausible setting. Yeah, so I'm with the Fantasy Sports and Gaming Association. We fully support this legislation. We estimate that there's 200,000 or so fantasy sports enthusiasts and players in Hawaii right now. Right now, they can play games and contests. We want them to be able to play all the games and contests. 25 states have regulated fantasy sports. We believe it's a game of skill, and it can be regulated as a game of skill and not gambling. That's how other states have done it. This would confirm the legality of fantasy sports in Hawaii. It would set up consumer protection measures, which have shown very successful in these other states where they're regulated. And like I said, we'd love to expand the market to Hawaii and get all the people who want to play and are playing fantasy sports to play it under licensed and regulated companies in the state. And this is good legislation, and we support it.
Thank you very much, Peter. Next up, we have FanDuel in support.
Good morning, Mr. Chair and members. Arturo Barajas, Government Affairs Manager with FanDuel. And I appear today to urge the committee to support HB 2004. This would allow for paid entry fantasy sports contests and allow for a framework of consumer protections. All these consumer protections allow for a safe and fun experience for those who participate in paid entry fantasy sports contests. And HB 2004 is a crucial step to allowing that to happen. Happy to answer any questions you might have. Thank you for allowing me to testify today.
Thank you very much. Members, questions?
Sure.
Chair Onishi?
Yes, for Mr. Chokin with Fantasy Sports and Gaming Association.
Yes.
Yeah, I had a question. Does any states require in their licensing fees paid for the licensing?
Yes, there's a variety of tactics of registration fees and taxes. We found that the registration fee, if there is one, and if it's significantly high, it'll crowd out operators. A lot of fantasy sports businesses are small entities of a couple of $1 million a year in revenue, such as the Fantasy Football Players and Championship, or it's a small business, and in any one state isn't that large for them. But if they can offer their 30 plus states, they can get a group of users, of customers to play and have prizes and have fun. So if every state suddenly becomes excessively high in regulations and registrations they can't offer in that state. So for example, the state of Delaware has a $50,000 a year registration fee, and they only have a couple of operators because it's just too high for any of the smaller operators and even some of the larger operators to operate in that state, because there's just not enough people in Delaware. And Hawaii, being a smaller state, not as small as Delaware, I think you'll have the same issues. So, I think that this is a good bill in terms of the cost structure. Obviously the registration fee is to be determined, so hopefully we can keep that low. But in terms of a lot of the other things that are burdensome for companies in terms of fees and regulations and licensing fees, I think this looks like a pretty good bill for the industry in terms of their ability to be able to operate in the state.
So in this bill, did you see anywhere in there where we would be able to charge fees or authorizes fees to be charged?
I think that's an open-ended to be determined question. I would defer to my colleagues at DraftKings and FanDuel if they have any input as well.
Well, I meant in your reading of this bill, did you see anywhere where it authorized fees to be charged besides your fees for playing?
Let me see. There was, if I can pull up the legislation. I apologize for not having it.
Because I don't see it. But I had another question, Chair, if I might.
Sure.
So in regards to the fees charged to players, is there any states that take a percentage per transaction to be paid to the state?
The other states, if they have raised revenues from fantasy sports, don't do it on individual transactions the player goes, right? So it's more based on a company's ability to operate in the state, annually.
Yeah, so licensing fees.
Thousands.
Right?
Yeah, right.
Okay.
So taxing the consumer, in addition to being burdensome and raising costs, there's also, if you have a successful business in a state, you have thousands, if not millions, of consumers, and it becomes it's a lot of work. So.
Okay, thank you, Chair.
Thanks very much. Members, any further questions? If not, moving on to HB 2177. First up, we have DOTAX in support.
Thank you, Chair. The Department of Taxation stands on its written testimony and support.
Thank you very much. Next, we have Tax Foundation of Hawaii with comments. Tom, are you with us?
Yes, I am. Thank you, Chair. Chair, members, Tom Yamachika from Tax Foundation. This bill is an administration bill. It has a lot of things in it. There are what may look like purely technical changes, but there's also a few blockbusters inside. And let me kind of go over some of them. One thing this bill does is it triples the penalty for filing a late return. And this is before any other penalties are applied. And usually if you get in trouble on the federal side, your maximum penalty without fraud is 25%. Hawaii penalties, however, stack. So a non-filer can and does get written up for 70% in penalties under current law, being 25% for late filing, 25% for negligence, 20% for substantial underpayment. And this will go to 120% if this bill is passed, which consists of 75% for late filing, 25% for negligence, 20% for substantial underpayment. This can earn the state a very bad reputation very quickly if we're not careful about this. There is a penalty for failure to file partnership, S corporation, or trust returns. This type of penalty can add up very quickly because it's per partner or per owner. We've taken the example of a partnership with 100 partners that files a year late, could face a bill of 100 partners times 12 months times $200 is $240,000. Now, this bill is this penalty is similar to that provided in the Internal Revenue Code, and the amount's about the same. Although the Internal Revenue Code tax is maybe triple ours, or at least now it is. That may change depending on some other bills that you are considering this session. And finally, interest on tax pending appeal. We need to remember that this interest is only paid on money that is adjudged to be overpaid, namely what the court finds to be the taxpayer's money. We're concerned that keeping this rate artificially low does not fairly compensate the taxpayer for the loss of its money during the years an appeal is pending. We think that a fairer method would be to pay the taxpayer the actual earnings of the litigated claims fund on the money that's determined to belong to the taxpayer. And that, in fact, was the approach that the courts mandated starting in 1976 in the Hawaiian Land Company versus Kamaka case, which is referred to in our testimony. I'd be happy to answer any questions.
Thank you very much. Members, questions? I have a question for Tax Foundation. Tom, is there a reason why, let's say I'm a very wealthy individual, is there a reason why I would purposely file my taxes late to try and gain an advantage or try and get one over on the state somehow?
That's a very good question. So people have, things that are happening to them. I mean, people in the family get sick. They go to the hospital. They're not able to do the things that they can when they're in the hospital, or if they're taking care of a loved one. Sometimes, stuff like that passes them. I've had cases in my private practice where I had a taxpayer that racked up $1 million tax bill because she couldn't attend to, filing tax returns because her husband was, hit with terminal cancer, and she was, spending a lot of time caring for him. So there are different reasons that different taxpayers have, and yes, certainly tax paying is very important, but different people have different life situations, and I think some accommodations need to be made sometimes. In the meantime, you need to, I think, consider what other states are doing in terms of penalties for infractions, because if you have a very wealthy taxpayer, which you want in your state, okay, because of the things that they'll consume and so forth, you want to make sure that our state has a competitive environment and is not greedy and draconian when it comes to penalizing footfalls.
Thank you. Members, any further questions? Jackson.
Thank you, Chair.
Sorry.
My question's for DOTAX. So according to the testimony from the Tax Foundation, these new changes would significantly increase penalties for filing a late tax return. Do you have any information on typically what kind of individual files late returns? Any background on that?
Yeah, can I just clarify one thing first, Representative? The late file penalty, it racks up, right? So it's 5% per month. Right now, the maximum is 25%, but it's measured on the underpayment. And so the late filing penalty has nothing to do with when you have to pay your taxes. The taxes are still due on the due date. So for instance, if you paid 100% of your taxes by the due date of April 20th, but filed your return 2 years late, let's say, under current law, yeah, there would be a 25% penalty, but because you are not underpaid, the penalty would be 25% of zero. So there actually would be no penalty, right? 25% of zero. So it's not that straightforward. The other thing is there is a reasonable cause exception that already exists within the penalty. So I think things like the other testifier raised about like medical, like let's say you're in the hospital with 2 months for COVID and you weren't able to file, like that would be a reasonable cause thing. But either way, that doesn't change the fact that everybody needs to pay their taxes on time. Like this is not an extension of that. But to answer your question directly, no, it's all types of taxpayers, and we do, I believe, 12 tax types that you have to file and pay. So it's all of our tax types. We see some individuals, companies, you name it, trusts. So it's not unique to one set of taxpayers.
Thanks for clarification. No further questions, Chair.
Thanks very much. Are there any further questions, members? Seeing none, we will move on to HB 2178. First up, we have no tax in support.
Thank you, Chair. Ted Shirishi again for the Department of Taxation, and we stand on our written testimony in support.
Very much. And next, we have Tax Foundation with comments.
Thank you, Chair and members. Tom Yamachika from Tax Foundation. We've submitted written testimony, but I'd like to just expand on it a little bit. At present, the availability of estimated revenue impact information on bills wending their way to the legislature is spotty at best. I note that Representative Onishi asked a revenue impact question on one of the bills on the earlier in the agenda on 1919, and was, and Mr. Shirishi had the information in his back pocket and was able to answer the question, but the issue becomes, well, why isn't this in the public testimony so other testifiers can review it, comment on it, and change assumptions that they think are unreasonable. We agree that having this information openly would be a great step toward openness and transparency in the important legislative decisions that you as committee members have to make. Is the current bill a way to make that happen? We don't think so, because number one, there's no consequence provided in the bill for noncompliance. So if lawmakers really want discussion to proceed on a particular bill, can just go ahead. And really nothing can happen if even if this bill passes and a bill is introduced that's not in compliance with it. We also note that the state auditor is required to review existing income tax credits on a 5-year rolling basis, and the reports issued by the auditor are supposed to trigger legislative review. I understand that process has started and has triggered some reports and some reviews, but the process hasn't been perhaps as consistent as everybody would like. And finally, regarding the provision of disclosure of tax expenditure recipients, we have mixed feelings on that. I mean, most people who file tax returns, like income tax returns, like you and me, we claim deductions. That deduction is a tax benefit. And why does my name have to, go on an open, publicly available list, when I claim a tax benefit? That would affect probably most of the people in this room. Now, and that's not what the bill currently provides, okay? But it's a logical extension of what happens when you attach breaches, or the loss of confidentiality on claiming of tax benefits, such as taking deductions, taking credits, taking exemptions. So we just ask the community to consider the logical extension of what they are doing here.
Thank you very much. Members, questions? Okay, seeing none, we'll move on to HB 2179. First up, we have no tax in support.
Ted Shirishi for the Department of Taxation again, Chair. And we stand in our written testimony in strong support.
Thank you very much. Next, we have Tax Foundation with comments.
Thank you, Chair. Tom Yamachika from Tax Foundation. As we've stated in our testimony, we think the bill is a little bit backwards. Typically in civil litigation, the judgment comes first and the lien comes second. The tax department's already gotten their lien, so I'm not really sure what the issue is that they're complaining about. If they can find the taxpayer's property, they can grab it. If they know the taxpayer has real property, they can sell it with the proceeds then applied against the tax debt. So we're unsure what a civil judgment would give the department that it doesn't already have. We haven't answered any questions.
Thank you very much. Members, questions? Not moving on to HB 2219. First up, we have DCCA with comments.
Aloha. My name is Iris Ikeda. I am the Commissioner for the Division of Financial Institutions, providing comments on this particular measure for the establishment of a state bank working group to establish a state-operated bank in the state of Hawaii. So back in 2012, this was also a big issue, and we, through my office, we did a study and looked at whether or not Hawaii should establish a state bank. We looked at several factors, if there were banks in the United States that were state banks. We looked at the Federal Reserve of Massachusetts research reports, whether or not there was access to credit, the lending capacity of our banks, stabilization of state economy, startup costs, and public policy issues. In the end, or since then, I note that American Samoa, which is a U.S. Government territory, established a territorial bank in 2016. And that was because commercial banks were leaving the marketplace. We did have a hand in helping them with their legislation to establish that bank just out of necessity. And that bank is the only bank in American Samoa. It did take about 18 months for the Federal Reserve to actually give them a master account. It is not insured by the FDIC, and the territorial bank was finally able to open in 2019. So we have other, some other comments, and our last comment is that we note that the working group is administratively attached to the department, but the department is not a member of the working group. I'd be happy to answer any questions. Thank you.
Thanks very much. Members, questions? Kobayashi.
Sorry, do we have other testimony besides, is BNF here?
BNF testified in opposition, but I'm not sure. I do not believe they are on the Zoom with us today.
Okay, so this is the only testifier we have on this particular bill?
On the Zoom, yes, that I believe DCCA is the only testifier that's with us.
Okay, well, let's, I do have questions that I can direct to DCCA. So, hi, Mrs. Ikeda. So, what would you say the Financial Institutions Division of DCCA's mission is with respect to the financial sector of Hawaii?
So the division regulates, supervises, and examines our financial institutions, which include banks, trust companies, mortgage companies, escrow depositories, money transmitters, installment lenders.
So,
yeah, go ahead.
So with respect to the commercial banks that you're referring to in your response here, your job is really as a regulator of those banks.
Yes.
And you undertook a study, or you're referring to a study related to the public banking issue that you cite as a basis for your opposition to this. And but it's difficult to square some of the items that they discussed in here with the reasons why we talked about internally as far as establishing a public bank. Does the study that you referred to relate anything to the amount paid by the state, significant amounts paid by any particular state or jurisdiction to the private banks for the privilege of having banking services with them, and how that works in the cost benefit analysis? I'm just curious if that's mentioned in your reports, because I didn't see anything here.
Yeah, I don't think that we mentioned that. I think that for all of our state money, it is being held in our local banks as well as some mainland banks. Just for the security for payroll. Payroll comes out of a local bank. A lot of our our credit card payments come from a local bank also. And so, you know, if all of those monies were to leave our local banks, it will hurt our local banks because, you know, they depend on that for their loan productions.
So you cited the situation with the Bank of North Dakota. Do they not have private banks operating in North Dakota? I thought they were both.
They were both. The Bank of North Dakota was started over 100 years ago when farmers were unable to get loans from commercial banks. And so
Sorry, my
that was
question was
started.
regarding whether there are private banks that are still able to survive in a public banking state like North Dakota. I wasn't looking for a history lesson.
So there are, the Bank of North Dakota is a correspondent bank, not a private lender.
Right. So there are other banks that are not all put out of business because of this. So because there was some implication in the testimony that this would be just a destroying aspect for the local banks, but that hasn't been the case for the correspondent bank in North Dakota, from my understanding. So the other item that I didn't see in any of the testimony related to the banking oligopoly here, that every situation is different. I think in a state like ours, we have a clear oligopoly situation, that being as distinguished from a monopoly controlled by one company, controlled by a small number of extremely large organizations that constitute basically the large majority of that particular sector. So in this case, it's pretty clear a banking oligopoly, and that oligopoly, like monopoly profits that monopolies generate, the banking oligopoly really pulls about $500 million on an average year out of the taxpayers of Hawaii. And really, I think one of the aspects that is not addressed in the report that you cite for your opposition is the impact on the local economy of $500 million getting sucked out in oligopoly profits by those large banks, and what our economy could be like should that yoke of oligopoly profits be taken off the people of Hawaii. Thank you.
Hey, members, any further questions? Just want to say thank you very much, Iris. Sorry the banks weren't here, so I guess we had to ask somebody. Moving on to the next bill. HB, I'm sorry, I completely lost my place now. HB 2227. First up, we have DCCA in opposition.
Good morning. I'm Steve Levins, Executive Director of the Office of Consumer Protection, and we're testifying in opposition to this bill. There's no question that the state has a compelling interest in promoting made in Hawaii products. However, to do this, the enforcement provisions do not have to be changed. Currently, the Department of Agriculture has the experience, the background to review compliance issues. If there are enforcement problems, they can go to the Attorney General's office, confer with the Attorney General, determine whether a particular case is meritorious to go forward. That's the way the system has been set up, and that's the way it should continue. There's absolutely no reason that enforcement provision should be transferred to the Department of Commerce and Consumer Affairs. Thank you very much.
Thank you. Next up, we have the State Board of Agriculture.
Good morning, Chair. Morris Office, Deputy Director for Department. The department will stand on its testimony supporting the measure, but we have some concerns that we raised in our testimony regarding the precision that, and for clarification purposes, that the trademark that the Department of Agriculture has is actually the made in Hawaii with Aloha is the actual trademark. So there's a slight difference in terms of what we're talking about. But other than that, we're available for questions.
Thank you very much. Next, we have DBED with comments.
Aloha Chair, Vice Chair, committee members, Dennis Ling for DBED. DBED stands on its written testimony offering comments. Thank you very much.
Thank you very much. Members' questions? Seeing none, moving on. HB 2437. First up, we have DOTAX with comments.
Thank you, Chair, Vice Chair, members of the committee. Ted Chair, issue the Department of Taxation. We stand on our written testimony providing comments.
Very much. Next, we have Tax Foundation with comments.
Thank you, Chair, members of the committee, Tom Yamachika for Tax Foundation. We believe, just to summarize our testimony, that there's a far easier way to administer what this bill wants to do. And that is, you folks can appropriate a certain amount of money to DCCA, and then DCCA can tell the doctors and so forth, okay, when you come in to relicense for another year, you won't have to pay me $500. We'll pay you if you're going to stay in Hawaii. So we think that would be a far simpler way. It wouldn't involve the tax system, which is complicated and creates other agencies' involvement, where it really doesn't have to, because the bill wants DCCA to police this anyway. And we think that it'd be a far more efficient way to accomplish the same thing. Be happy to answer any questions.
Thanks, Tom. Members' questions? Seeing none, we will recess for DM. We're good. All right. We are back for decision making. Thank you, members, for your patience. First up, we have HB 1919. Members, there's a lot of really great things in this bill. I'd like to work with the healthcare industry over the interim to try and craft something that's a little bit more targeted. But right now, because of the revenue implications, I must defer. Next up, we have HB 1962 relating to gambling. This is a study for DHHL. Members, I'd like to pass this one out with purely technical amendments needed for clarity, consistency, and style. Questions, comments, concerns? Seeing none, Vice Chair.
Chair's recommendation is to pass House Bill 1962 with amendments. Chair and Vice Chair vote aye. Representative Belatti.
Aye. Sorry. Aye.
Representative Kobayashi.
Aye.
Representative Onishi.
Aye.
Representative Sayama.
Aye.
Representative Takayama.
Aye.
Representative Okimoto.
Reservations.
Thank you, Chair. Your recommendation is adopted.
Thank you very much, members. The next measure is HB 2004 relating to online fantasy sports. This is a difficult one. I am going to defer it. And again, I would like to work on it some more over the interim. But I think that at some point, this is something that we absolutely should do. It's a huge market and we may be missing out on tax revenue. So we'll be deferring that measure. Next up, we have HB 2177 relating to state tax administration. Members, I would like to pass this one out as an HD1 with technical amendments. Questions, comments, concerns? Seeing none, Vice Chair.
Chair's recommendation to pass House Bill 2177 with amendments. Noting the presence of all members, do we have any reservations? Reservations for Representative Okimoto. Do we have any no votes? Seeing none, all others voting aye. Chair, your recommendation is adopted.
Thank you very much. Next up, members, we have HB 2178 relating to tax expenditure accountability. Members, I'd like to pass this one out with technical amendments. Questions, comments, concerns? Seeing none, Vice Chair.
House Bill 2178, Chair's recommendation to pass with amendments. Noting the presence of all members, do we have any reservations? Reservations for Representative Okimoto? Any no votes? Seeing none, all others voting aye. Chair, your recommendation is adopted.
Thank you very much, members. Next up, we have HB 2179 relating to collection of delinquent taxes. Members, I would like to pass this measure as is. Questions, comments, concerns? Seeing none, Vice Chair.
House Bill 2179, Chair's recommendation to pass as is, noting the presence of all members. Do we have any reservations? Reservations for Representative Okimoto. Do we have any no votes? Seeing none, all others voting aye. Chair, your recommendation is adopted.
Thank you very much, members. Next, we have HB 2219, the Manoa Special relating to a bank of the state of Hawaii. Members, I would like to pass this measure as is. Questions, comments, concerns?
Chair,
Yes, Chair Nishi.
The way I read this bill, basically it's to establish a state bank. And I would prefer that we move for a study to review
working
the
group.
necessity for a state bank. So I'm going to be voting no on this.
Understand. Actually, it's a working group which may lead to a study.
It is a working group, but the working group's responsibility is to actually to come up with how to set it up, not a study of whether or not
We
it should be set up. So,
Understood. Thank you, Chair
Thank
Nishi, for
you.
your comments. Members, any further questions, comments, concerns? Seeing none, Vice Chair.
Representative Bellotti, I think has.
Oh, I'm sorry, Rep. Bellotti, did you have some
I'll
questions?
support, thank you, Chair. I'll support the chair, but I do share the concerns of Representative Onishi, so I'll be going with reservations. Thank you.
Thank you very much. Any further questions, comments, concerns? Seeing none, Vice Chair.
House Bill 2219, Chair's recommendation is to pass as is. Noting the presence of all members, we do have a reservations from Representative Bellotti. Any further reservations? Reservations for Representative Okimoto. Okay, do we have any no votes? No votes for Representative Onishi. Any further no votes? Seeing none, all is voting aye. Chair recommendations adopted.
Thank you, members. Next, we have HB 2227 relating to the Made in Hawaii program. Members, I would like to pass this measure with technical amendments. Questions, comments, concerns? Seeing none, Vice Chair.
House Bill 2227, Chair's recommendation to pass with amendments, noting the presence of all members. Do we have any reservations? Do we have any no votes? Seeing none, Chair recommendations adopted.
Thank you very much, members. Last measure on the agenda today, we have HB 2437 relating to taxation. Members, I would like to pass this measure as is. Questions, comments, concerns? Rep. Kobayashi.
Thank you. So my position on this type of tax credits is that it's really just a backdoor expenditure of public money. If we want to do subsidization, if you will, of these professions or any profession, we can be a lot more transparent and accountable if we just do a direct appropriation. That's a primary reason I'll be voting no on this.
Thank you very much, Rep. Any further questions, comments, or concerns? Seeing none, Vice Chair.
House Bill 2437, Chair's recommendation to pass as is. Noting the presence of all members, do we have any reservations? And we have a no vote from Representative Kobayashi. Any further no votes? Seeing none, all voting aye. Chair recommendations adopted.
Thank you very much, members. We are adjourned.